The broadcast is now starting. All attendees are in listen-only mode.
Say you're trading alone but want a good place. If they're here, you found it in phase. Say you're living at home but want your own house. Hang out with us in phase before you click your mouse. So you want to be an ace? Surround yourself with traders better than you, and you can do that in phase. Give me an F, give me an A, give me a C, give me an E. Phase is the place to become an ace. TGIF, my trading warrior brothers and sisters, how are you? Hey, Patrick, Walter, John, Kevin, Dan, how are you? Everyone doing okay? All right, I just want to review. We talked about the euro yesterday. Everyone remember I asked Blake when we were up here yesterday, so how are you handling your short position? Let me show you my screen. No, that's my cam. That's me. You guys know I'm just an old man, old handsome old man. Hold on, my friends. Here it comes. Oh, the guy with no teeth, yeah. All right, so yesterday we were here in the euro. Everyone remember, and Blake came on, and Blake's going to be with us in 30 minutes. You know, I tweeted something out, and I still believe in it. It's one of my maxims, is to, hi Dan, is to surround yourself with traders better than you. And I think this is a place where you could walk that talk. I'm walking that talk. Luca, how are you? I see the Bund got to your 163 level up there. Okay. Okay, good. So I was having this discussion with Blake. I said, well, how are you handling your short position? He said, well, I didn't add on yet. And my analysis said we were holding this blue line. Remember yesterday? Hey, Ziggy, how are you? And I said you could either sell a rally back at the highs or new highs. We didn't quite make a new high. We just challenged a high. I was a little surprised we didn't take out this high for a divergence. And I said, and if you missed that, I said you could get short back under 40. Anyone remember that from yesterday? So once we took out 40, we broke down, and even if you missed that, you had to rally back to 40 to try it. Give me a Y if you remember the analysis in the euro from yesterday. So, I mean, what to do now in front of the French elections? I'm going to be very interested to see what Blake's going to do. I know he holds positions into all kinds of red events. 61.8, okay. Yeah, 61.8 was the high up there. That was another good call by Dan and Hardianto. Hardianto also made a good call of coming out of euro yen at a 38% retracement. So when I'm talking about surrounding yourself with traders better than you, better than me, I'm not just talking about the team. I'm talking about guys in the community too. I'm talking about guys in the community too, right? There are many guys in here in the community that probably have a more consistent hit rate than me, and because of that, it makes me better. Give me a Y if you understand that being around, you know, great guys and doing your intelligence gathering is an edge. I mean, I consider it a huge edge. Okay, instead of trading out of your igloo. That was a great call too, Dan. You know, you have great trades every day. Dan, you're like one of the guys I'm talking about right now, along with guys like Jess and I can't, BW, everyone. Okay, so Jess is flat into the French elections. My personal philosophy is different now that I'm older. When I'm younger, people used to say, Dale, I would take positions into everything. In the old days, it used to be money supply on Fridays was a big mover because the Fed, after a money supply number, would raise or lower rates when the Fed was much more active. And I would hold, you know, euro dollar positions. Okay. Thank you, Dan Noor. So that, so, you know, I'd be flat. You know, I know the market's going to be here for sure. I can guarantee you the markets will be here for sure after this election result on Sunday night when we come into trading in the Asian session or Europe or here Monday morning. Make sure your equity is too. Can I get an amen on that? The markets will be here after this event. Make sure your equity is. Okay. So I also want to do a little coaching here. You know, this isn't about trade. It's not about education, but I do want to do a little coaching here, and it's about trade selection. Okay. So many know early in the week I said, you know, I'm not impressed with silver. It was up here. It was diverging. It broke the rising wedge, right? And we've almost retraced 100%. I hope this helps some people here in our community. I know at least a few got short silver, and hopefully you wrote it down. We're about to get a third drive. Here's one, here's two, here's three. But my point is on trade selection, I use the analog of American Idol. Okay, in American Idol, you could be a great singer. Thank you, Dan. Yeah, I'll give myself the face award. Nice, Luca. That was a great call by Luca too, and you were stalking that for a long time. So you could have the best voice in the world, but in a singing competition, their most important choice is what? You know, American Idol, all these singing shows, The Voice, their most important decision is song selection, song choice. Because certain songs fit people better, right? So in trading, our most important decision or choice is trade selection. And I'm a big believer in shorting the relative weakness and buying the relative strength. And that's why the call was in silver, which has had a very nice decline, about 80 cents. And at the same time, if I had made the wrong trade selection, like in gold, I would have taken heat because gold kept going up and hasn't given up as much on the downside. So give me a why if you understand the trade selection. You could be right about the direction of a group like metals or the direction of the dollar. And if your trade selection isn't good, if your trade selection is wrong, you're not going to benefit as much. And also, if you could identify the relative strength and you buy it and markets are going down, it's going to be more forgiving if you're early, and that's one of my tendencies because it's not going to give up as much. And if you're short the relative weakness and things are going up, it's not going to hurt as much because you're shorting the relative weakness and it's more of a sympathy rally than leading the rally. So I know a lot of you veterans already know this. I know a lot of you guys already know this, but some people don't. and even veterans need to remind themselves that before they click their mouse, am I shorting the relative weakness of this subset of instruments? Or am I shorting the relative strength because it looks like it could fall further because it's up more? Okay, so don't be a hero. Go with the market message of something that is underperforming to short and overperforming to buy. That's my lesson for today. Everyone with me on it? You find value in that? Is this, let me ask this. Is this new to anybody? Give me write new if this is new to you. Write new if it's new to you. Not new, but must be repeated. You're right, Walter. Okay, Jess. Yeah, I know you're not new. You've been doing this as long as me. Okay, Luca. Okay, it's not hard to do. Don't tell yourself that it's hard to do or it will be hard to do. Okay, Ben? Hi, Ronan. How are you? Okay. So, you know, you need to write certain things down if you're having issues, psychological. Hi, Gino. Nice to meet you. Monthly breakout in gold at 1290. Okay, so we're almost there. Watching it on Monday. All right. So we've had some great calls out of the community on Euro Yen. A lot of people caught the high Oscar. A lot of people caught the yen crosses. I just want to show you something on the yen crosses. And I know that ForexAnalytix has a long-term view, bullish view on the pound. So because the pound is a relative strength, you would think that it's probably not too smart to short the guppy, right? Well, you know, everything has its day. And guys that know me, this was a pretty classic 3-drive to a top formation. So here was 1, here was 2, here was 3. See that? So be careful. I'm not saying we can't go up again to 140.50, but we're no longer confirming the highs here. And even if we get one more push up to 140.50, see where the RSI is, we'll definitely have another divergence at new highs. And then I saw a tweet by Hardianto, who also bought the Euro Yen at the 115 level like Blake did and ForexAnalytix did. And he found a reason to get out. We were talking about this yesterday. And this up here is 1780. Was a pretty good retrace, 38%, Hardiano, is that correct? Was it 38% of this, plus moving averages came in here. I think you're going to get another chance because look at this reading, something I talked about with Steve Volge. So, yeah, nice move, Hardianto. Great work. All right, I want to shift subjects a little bit. Yesterday, Steve ahead of time announced the ForexAnalytix giveaway. Has anyone entered? I know we got a lot of response. I certainly would want those silver dice because it would match my hair. Okay, I want those silver dice, Stelios, because it would match my hair. Okay. Anyone enter the giveaway by showing your trading setup? Okay, and something I talked about with Stelios this morning, it's really not the number of screens that makes a difference. It's the vision of the trader. So you could have a NASA setup and look like and have a spaceship, but if you don't have correct vision, And I think that face is kind of like your trading optometrist. Hi, Jax, how are you? No, this is it. Well, I haven't seen you in a while, Jax. Nice to see your handle. I hope life has been good for you since I left FX Street almost 2 years ago now. Coming up on 2 years. So, been a few years since I saw your handle. Thanks for finding me and following me. I want to thank everyone for finding me and following me. Yeah, time flies when you're having fun, right? So anyway, you probably want to get your entry in on the blog, and I think this is going to be tough to beat. This is Nicola Duke's entry. It's going to be very tough to beat. Anyone think they're going to be able to get more votes than this?
But by the way, good morning, Dale.
Hey,
for people not to misunderstand, this is actually not Nick.
I know.
But I also need to add that, you know, I usually don't give away numbers, and we always have very good viewing on our blog posts. They always go above 1,000 views. But
wow.
this specific blog post has already surpassed 1,400 views within it's
a day.
Roughly it's less. It's roughly 20 hours that it's been up.
Oh wow! Yeah.
And yeah, I also need to stress out to people, because they're sending us things on Twitter, that at the bottom of the blog post it actually mentions the email address they're supposed to send it at. So we're expecting them at the email address. We've already started receiving pictures on the email address. I'm just telling it in case some friends are confused and they think that they just have to tweet it to us.
Okay, thank you so much, Steve. And what a great idea that attracted people to want to play the game. Yeah, great idea. Good promo. I love those dice. I was just guessing, knowing how Stelios feels about silver, that would be a prize that he would really want. And then I found out that it's him that's donating those. So, what a great giving spirit. Someone who's like King Midas, only in silver, giving away some of his silver possessions. Isn't that something? Isn't that a giving spirit? I ask you.
You're making it sound very dramatic, but yeah.
Huh? Yeah, are you Joan? You're going to miss those Stelios. You're going to miss them. And I know that's your trading method. So I hope you come up with something else besides silver dice to decide where you're going to be entering silver on the long side. And I know you want to buy it lower. I hope it gets there for you. So, Stelios, I'm glad you're here, because I caught something that you Skyped to the team, and you have a very bullish view. I don't know if it's recent, but you sounded like you had a lot of conviction about oil. And I'm going to put the oil chart up here. And you think $60 is a lock, so or a high probability outcome. What is it this week that triggered this type of conviction that you have about oil?
Well, it's not something that I have just come up with this week. If people follow me on Twitter, when oil was trading in the 30s. I was always saying that the market can never balance with oil at that price, so not even 40s, right, in my opinion. So it's a view I've had for a long time, and I think that the trigger was mainly the fact that the oil producers. Hold on a second, I've got my kids here.
Okay. Anyone ever see the movie Mr. Mom? Here's the Greek edition. Do you have daughters?
I have daughters. Two
okay.
Three and four.
Have you ever seen the movie, Mr. Mom?
I haven't, but I'm going to watch it.
Okay, because I could see you when they're about 16, 17 years old. Michael Keaton played Mr. Mom. And
Okay.
when his daughter was going out on a date, he showed up at the door with a chainsaw.
Yeah, yeah.
It's really hilarious. You
Good
better
idea.
treat my daughter well. You know, and fathers are worried about it because they remember what they were like.
Yeah. True.
You know?
So anyway,
All right,
going back to oil,
oil.
what I always like to do is I always like to take a step back and look at the big picture. And for me, the big change was obviously the producers agreeing to cut production. Now people are going to say yes, but U.S. shale oil is balancing that. But if you go back decades back and see how OPEC works and how oil works, you know, as a product, they will do, like Draghi said, pretty much whatever it takes to keep it within a range that they think is something that works. So they are not, they are not afraid to let oil drop to very low levels when they need to take out some of their competition for a while, like they did, you know, when it hit 30s. And they're also not afraid to do whatever it takes in terms of production to keep it at levels where you know, the majority of the producers are you know, as a business, it's making sense for them. And it's, you have to remember, for some of these countries, it's their only export or their main export, so they have to manage it properly. So my view has been, ever since they made an agreement, or it looked like they were close to an agreement, my view was these low levels will never last, and they will, it's not going to $100 again, no, not for a while, I don't think, but they will target something like $55, $60 for sure, and they will do whatever they can this way or the other to make sure that happens. So, you know, and I always like to be a I'm what I call a selective contrarian. I like being a contrarian, but not in everything. Like when people were selling Greece and GGBs and all that, I was still working at Merrill Lynch at the time, and my bond traders were saying, you know, what's a good price to buy Greek bonds? And I said, well, if it's over zero, it's not. So you know, some things I will not go against, but others, when I think the big picture has a good narrative and it has a good story behind it, and I can see it working out, I will do that. And that's why I've been long the sterling as well. And you know, because again, in that respect, I do think there's a good case for it. So that's my view. You know, I could be wrong. Obviously, I've been wrong many times, but I think year-end $6 for oil is not out of the question. I think it's over 50-50 chance for me. That's why I'm also long Norway, etc.
Dale,
well, I remember.
I can tell you as a fact, because, you know, he's a very modest guy, that Stelio has always maintained, you know, long-term views in the market. And like the vast majority of the cases, you know, that he's convinced about something. By the way, we mostly, unfortunately for us, we mostly agree on many macro views, but I can tell you that, you know, he is so convicted that he often, you know, stays in position. I mean, I'm also not a short-term trader, but he can maintain positions like for months and years to come. And, you know, at the end, he always gets it right. I mean, for the oil example, I remember when the banks were coming out and saying, you know, that it can drop to 15, 20. And, you know, he was saying, I'm going to sell my house and buy oil there.
You know, guys, I remember being, I was on FX Street and I was interviewing Blake when we were down here. And I have the monthly chart up here, and I was buying the stuff too, like right around 32 before we had a throw under on this wedge. And you guys know my philosophy on the wedge. The wedge started up here at about 62. And I had a little debate with Blake, and you know, he was kind of negative, but Chris Bear, Brazil, straightened him out. You know, we got and talked about it, and you know, Blake's an open-minded trader too. He'll listen to people that he respects too, and that was the low down here, the throw over, and then once we got back over 32, we've been marching. And if you notice, some of these moving averages are coming in right around the top of this falling wedge, which is something I traded off the weekly. This is the monthly. So I think 62 is also doable. And one other factor, you know how sometimes people will keep up a market until an IPO is launched? Let's not forget Saudi Aramco is doing the world a favor by letting them, after 70 years owning it privately, for the public to come in and hedge funds and institutions to own a piece of Saudi Aramco. So I believe they're going to do everything they can do to keep the price of oil up into that IPO. Just my extremely accurate and humble opinion.
From a macro perspective, though, don't forget that all those countries have now realized, I mean, since quite a few years ago, but are now actually taking action. They've realized that oil is not going to be, cannot be their main income forever, for obvious reasons. I mean, the humanity is slowly but steadily shifting out of oil, and you've seen the latest developments in with electric cars and everything. I mean,
yes.
This is now something that is gaining momentum. It's not going to be easy or fast to shift out of oil. Just to give you an example, humanity has been using coal for more than 100 years, and we're still using it to produce electricity. Of course, it's not the main, it's not our main substance of producing electricity, but we're still using it. I mean, shifting out of oil with so much infrastructure based on it is not going to be from one day to the other, but for sure it's going to happen, and they've realized that. And that's why they're trying to diversify. They're trying to diversify their income. They're trying to diversify, what creates their GDP, because they know that sooner or later, if they don't do that, they'll go bankrupt.
Yeah, I mean, you even see countries like Kuwait running ads about their healthcare system now to diversify. People are taking medical vacations to certain oil-producing countries now that can compete with on the global scale of getting high-quality healthcare operations for less than it would cost here in the U.S. So yeah, that's part of it. People are they're starting to diversify away from something that they've depended upon forever. That's another good point. But I do believe that I'll be looking for a peak in crude after the Saudi Aramco IPO. So that's what I'm looking for, because I still think that what's happening here in the U.S., especially if we head up towards 60s, you're going to see the rig count expand dramatically. So that's my target for the upside, and I think that's going to be a great shorting opportunity up there. But that's down the road.
That is also the main argument for prices of oil not returning back there, because now the U.S. is considered to be the incremental supplier. You know what I mean?
Right. Yeah, I do. So Stelios, thank you. Thank you for your input on that. Steve, Blake's going to be here in a couple minutes. Any updates you want to give on DAX or anything else that you've been stalking, my schizophrenic trading warrior brother?
I can show you something that most people are not looking at, but I think you're going to like it a lot.
Okay, let me get it.
Because of your love for wedges and...
Am I doing better with the controls in the room now, buddy?
You're doing excellent.
All right, you've got it.
Do you see it?
Waiting. Got it. Palladium, wow, that's an esoteric one. Okay.
Yep. You know, we've traded it plenty of times actually in the past. I mean, in the fund I was, and quite successfully, not for any other reason, but because it has been, from a technical perspective, excellent. For example, it picked up here at exactly the 161.8 of this move lower.
Right.
Then we had a triangle. The break
Right.
of this triangle that we were monitoring for a long time was amazing. I mean, look at the uptrend it produced. I mean, it looks little if you look, you know, at the zoomed out version, but it actually was a move that took us almost $200 higher within, you know, a very small amount of time. And then when we broke below this trend line, you saw what happened.
Yeah.
Now,
Yeah, so it's a great technical market. You consider it a better trading market than platinum?
Yeah, yes. And although I have to tell you, platinum, in my opinion, looking at the long term, it is undervalued. I mean, I currently don't have a setup for platinum that I love, but I would definitely be looking for opportunities, for technical opportunities to be a buyer, if anything.
Okay.
But what I wanted to
That's an interest. Yeah, you got it. You got it all. You have a rising wedge there.
Not only that, we have a test of the 78.6% feed.
Yeah. Trend lines, everything.
And check this RSI divergence. It's been going on since July.
Yeah, almost 8 months.
Yes.
Yeah.
So I really think that momentum has seriously waned down here. I mean up here, and very likely we're soon going to have a shorting opportunity.
Okay.
That's why.
So that's something that wasn't on my radar screen. I don't even chart it. So
you see, now it is.
Everyone thanks Steve for bringing something kind of a
exotic,
undiscovered market that most people don't even follow.
Wow. Something else, Dale, that's more interesting for people, even for people that don't trade it. Sigma Square actually tweeted that.
Oh, the Euro Bund.
The Bund, yes.
All right, now you know what? I got to hand this to Luca because before I came here, we had, you know, that big red candle that on the way down, Steve, about 3 weeks ago.
Yes.
Luca was looking for a rally back to 63 something, which he got. Yeah. And he's probably short there. Are you short now, Luca, on this? So this was the interest rate play on the Bund.
Yes, but look at
what it cost. Look at the you know what cost that? Oh, look, head and shoulders possibility too.
Exactly. After a huge uptrend, we have a possible head and shoulders formation. But by the way, the rejection up here was perfect. I mean, was technically perfect. Why? Because we got rejected from the triple confluence of this ascending channel support acted as a resistance, the 200 DMA, and this steep ascending channel resistance as well. So here we had a triple confluence followed by this candle, which was a Marboso opening black. As you understand, it was obviously that we were heading lower at least, you know, temporarily, and we're currently also testing a very important zone. Why? Because this is horizontal support, the 50 DMA, and also this steep ascending channel support. Now, this is an important chart not only for people that trade the Bund, but also for people that are interested in having a view of what happens to the Euro USD, to the USD CHF, etc. That's why I'm showing it.
Okay, and you got plenty of candlestick formations up there the other day too, didn't you?
Can you guys hear me?
Oh yeah, hey Blake, how are you, buddy?
Okay, hey, I just want to make sure you can hear me.
Yes,
no, hear you, bro.
Hey, Steve. So what would break that chart higher?
From a technical perspective, you mean?
No, from a fundamental standpoint.
Anything that has to do, obviously, with anything that two factors actually. Anything that will affect in general safe haven assets to be bid. So, for example, risk off, or anything that is specific to the Eurozone. For example,
the election.
So a runoff between Le Pen and Melanchon would
make it fly. That would make it fly to the roof.
Okay. Just want to make sure everybody's clear on that. Considering, you know, going into the into the second round of elections after this Sunday, you know, if we should find out that Le Pen and Melanchon are going to face off, I would imagine that the Bund that you see there would completely destroy that chart. It would rally so hard.
It would mount the rally of all times or whatever, because keep in mind that I know you know it, Blake. I'm speaking to friends that are
Sure.
Keep in mind that the issue here is the following. Any dramatic events that happen to France is the second power of the Eurozone, okay, and Italy is the third. So anything that happens to France that might signal to the markets that France might just exit would immediately mean that the chances of a breakup of the Eurozone are very high. That would immediately mean that bonds are the absolute safe haven of this part of the world. Also for redenomination risks. What I mean is the following. When you want to be safe and you want to place your money somewhere, you also have to take into account the currency you're going to be using. In the case of a Eurozone breakup, the only currency that is going to appreciate is the new Deutsche Mark. So
the new Deutsche Mark.
Yeah, okay. Exactly. So by placing your money in bonds, not only would lead to making gains because of the Bund appreciation, because of the risk-off, etc., but would also get people piling up there because they would want to benefit from the appreciation of Germany's currency after the breakup. And that's an extra reason why we would get an amazing rally for the bonds. I need to reiterate here that I do not expect a surprise from France. I'm just saying what would happen.
I've been around a while. They were trading currencies on chalkboards as the Merc when I was a runner there in the mid '70s, and one of my favorite correlations to trade was Swiss D-Mark. And it was a great leading indication, and that went away when we went to the euro. But D-Mark Swiss was, that spread told you a lot about the direction of the dollar. So that would be okay with me.
Yes.
Go ahead, Blake. So what are your thoughts going into this weekend, buddy?
Oh, I think Blake disconnected actually. Probably he had some problems.
Oh, okay.
Oh, yeah, he just wrote, I think my go-to webinar failed.
Oh, okay. Well, he'll be back.
Yeah, he will relog, yes.
Okay. So, so that's interesting. And the other thing is a benign outcome is going to send us right back down towards that blue base.
Very likely. Very likely. But I remind you, since the Bund and the treasuries are fighting for safe haven status. I mean, they're both the absolute safe haven status. So, correlation algos and human thinking about correlations would keep, regardless, the bonds bid if for any reason the treasuries remained bid, for any reasons that were not completely esoteric. I mean, that had to do completely with the US market for some reason. Although, you know how it is. Now everything is globalized. I mean, since the US is the #1 steam engine on the planet, anything that would negatively affect the US would also sooner or later negatively affect the rest of the world.
Spill over.
Yes, exactly. Spill over in a very, very big way.
Well, a lot of people are saying the 10 years. Go ahead, Blake.
Hey, Blake, welcome back.
I was just going to say, I missed a little bit of the conversation. My go-to webinar shut down, so
okay.
I just kind of excuse me. So go ahead, Dale.
I was just going to say that I think that there's still more left. The yields on the 10-year cracked 2 1/4. They're trading right here, right now. But a lot of people are saying that we could go 185, and it's just simple arithmetic. 2 1/4, 265 has been the range. 2 1/4 is kind of a breakdown. I'm not sure if we're going to follow through on that, but if you just subtract that, that gives you a yield on the 10-year under 2 at about 185. And TLT I showed here, I believe a week ago, and I still think it could retrace to where it was before the U.S. elections, and that's about 130, and we're still trading about 124. So that's all I have to add to that. I don't think that the Treasury rally or yield decline is over quite yet in the U.S.
I'd agree with you. I'd agree with you. And Steve, I was asking about the boons, and thank you for the explanation. Even though I missed part of it, I pretty much know what you were going to say. Thanks for that explanation for everybody, because it's important to understand the ramifications of the potential risks that are ahead, especially this weekend. There's something to be said about how strong these precious metals are. I know you pulled up palladium earlier, but there's something to be said about how gold has not really backed off that 1300 level. And it's a multi-year, we're talking 6-year trend line right now.
Yeah. Yeah, Ronit, who I'm going to be interviewing Monday, I met on Twitter, he's saying 1290 closing is a monthly breakout. Monthly.
Yeah, I mean, we have to see what happens by the end of April to really be, in my opinion, to be too excited about the monthly chart. I'm bullish gold. I mean, it's the fact of the matter that it has not broken down in the face of everything that we've seen, and even the dollar strength that we've seen, it's got to be concerning for anybody who's short gold. And I'll tell you, if I was short gold coming into this weekend, knowing where we're at and knowing the risks that are ahead, I don't think I could stay short. I mean, that, and one of the things that I always do, and I'm sure Steve could probably say the same thing, is whenever I'm in a trade or I'm even thinking about the market, I think about what both parties are thinking at that moment. So for example, if I'm long gold, I'll think, okay, how do people that are short right now, if you're on the other side of this trade, how are you feeling? And that's what allows me to sleep at night.
Under duress.
Trade.
Yeah, because they're under duress.
Well, yeah, I would think so. And so if you and you have to say the same thing about any trade you do. If you're like, okay, I'm long the euro right now. How do I feel being long, position where I'm at? And then how does somebody who's short the euro right now, maybe a little higher, maybe a little lower, how did they feel? And where do I think the big money was traded? So that's that's always super important to me as a trader, is trying to think about where people are positioned in the market at any given time and what's going to make them really worry or be concerned, and where are their stops going to be. I always think about those things. And
there you go. I was just going to add that to your discussion here, Blake. People say, well, how do you know where people's stops are? And I go, well, just imagine you're short. Where would you put your buy stop? That's where everyone else's is.
Yeah, I mean, chances are you're just like everybody else, and I'll be the first to tell you I'm no different than any other trader. And I think about where would I be putting my stop if I was short or long, and if my stops, if I think my stop should be here, that's probably where the majority of the market is thinking too, realistically.
Yeah, they're over swing highs that everyone sees, swing highs and lows.
Yeah, Steve's got that perfectly mapped out there in that little resistance zone that's up there around 1300. I mean, everybody's stop, even if you go, okay, well, I'm not going to put my stops at 1300, I'll put them at 1310. Then there's another guy out there saying, okay, well, I'm not going to put them at 1310 because that guy's going to get, those stops might even get tripped too, so I'm going to put mine at 1314. And then above there, okay, well, there's a 38% at 1321. Okay, well, then there's going to be some stops above there. But you think about like the escalation of those prices getting tripped up should levels break, and that's exactly the process that I go through as a trader. And every trade I'm in. The grand prize stop loss, buy stops, in my opinion, Blake, is the high that we made on election eve. See, that was a big reversal. That's where the market turned up,
and that's where the dollar turned up and the gold turned down.
I can guarantee you there's going to be stops above there should we get up there.
Yeah.
You
Right.
know, I can guarantee you that much too. I mean, there's and you can't really guarantee anything in the market, but I'm pretty sure there's some stops above there, some long-standing, you know, people that are, you know, short gold that just have stops up there. I have, you know, if we make a move up towards 1320, 1330, people are going to start shorting, putting stops above that spike high again. You know, it's definitely a magnet level, I think, for the market. But anyway, yeah, I wanted to bring that up, and I know you probably, I think it's probably a good idea, Dale, because I know you like to give people a break, give people take a little bit of a break. Steve, you have any other comments you want to make before letting Dale put us on break for a bit?
You know, in light, I just have one before I walk away. Maybe Steve could keep talking. I just need to walk away for a minute. In light of what Blake has said, and in light of what I say, prudence over valor, if you're still short the silver from the rising wedge breakdown early in the week that I displayed, I would book it and just enjoy the, you know, relish the victory and take a look at what happens coming into next week. So I'm a big believer, you never go broke taking profits, and prudence over valor. And so Blake just reinforced that view. I would flatten out any short positions that you still have on silver.
Yeah, you know, I know a lot of people are going in, they're really going to stay away from, you know, they want to reduce risk, and that makes sense. I mean, you got to think about both sides of any, you know, equation. I got some interesting things to show you when we get back from break. So.
Okay. Okay. So I don't know what to break with, but you know, there were some great trades by Luca and you, Blake. I think that the face community did very well on the end crosses, especially Euro Yen. I know a lot of people bought it down there with you at 115, and people were waiting for that price target. So I don't know. I think that maybe a face award. I think I'll take control back here and just award it to the community, because I think that most people had a great week. And you know, you don't always have great weeks, do you?
Nope.
So enjoy, you know, I mean, enjoy it. I know you had a good month this week. So I want to give this award to everybody for, you know, just a great job, and the attention that they give. I mean, they spend the most precious currency hanging out with us every day. You know, I know it's, I say my mission statement, I know it's yours and the whole team's, is that our mission is to build up and edify traders every day. That's really our total mission. There's no other mission, is that we're trying to help. And when I see people do well, you know, it's almost as good as me doing well. You know,
right.
I relish when other people are succeeding in the market, because you know what, it dispels that thing that people hear all the time. 90% lose 90% of their equity in 90 days. Well, you know what? I don't think it happens here. And especially if people are doing their work and following.
I'll grab it. Okay, so there's a few things. I want to show you this really quick, and so you know, obviously this Sunday is a big deal, and the problem that I have is I won't be actually in front of my computer personally. We scheduled a baseball game. Well, it's all the kids on all in all the leagues. They go to the Chase Field ballpark with all their uniforms on and march across the fields, and they do it every year. Just this year, it so happens to coincide with the French elections, and you know, obviously we have tickets, and we take our boys because it's fun for them, you know.
I just have a piece of news, Blake, that I just saw. Someone Skyped me that Thomson Reuters French election fund manager forecasts a Le Pen win. Then
really?
Euro USD to 97, 110 high end if it doesn't happen. But there is a forecast for Le Pen win by Thomson Reuters, a fund manager.
Okay, so because you are, whoops, that's kind of screwed up. Okay, so I'm going to show you a couple things, and that's really, it's interesting, Dale. This is from the Telegraph, okay, and actually I put this on the ForexAnalytix. If you know, right here you can
Oh yeah,
click
I
on
saw the link. Yeah.
Yeah, this is just a kind of a up-to-date polling. You know, now polls are going to be all over the map, but one thing that I'm looking at in particular is I want to grab this the highlighter here. Actually, let me grab the spotlight. There we go. Okay, so what you'll notice here is notice the different favorabilities. Like in this case, you have Macron. He's been very steady, holding a dominant lead. Well, I say dominant. It's not really dominant. It's all fairly close. Fillon has been marred with scandals. It was his wife, getting paid in the, hired his wife in the campaign, getting paid, it's like all sorts of shenanigans going on. He's fallen off the face of the map. I'm surprised he hasn't dropped out yet. But one of the most interesting, and you can see like,
Voulez-vous coucher avec moi?
Oh no, that was Hamon. That was Hamon. I'm sorry. Fillon has been fairly steady. Hamon was the one that was marred with all the whatever. Anyway, but what I wanted to show you is Melancon right here, and you can see his rise, and he is one of the parties that could really that could disrupt the euro. And you have Le Pen, which is right there, and these margins are so dang close. I mean, if you look, let's go to right now. I mean, this is current. You can see, these four candidates, I mean, we're a very tight race, just within a couple of points each. And so the two top candidates, unless there was one that was that took over 50%, two of them are going to go into a face-off, which is probably going to be the case. And most people are expecting a Le Pen, Macron, face-off. I mean, that's what most people are expecting. But again, if you've seen the rise of Melancon, it's been pretty amazing. I saw something on him the other day, and I shared it with a few traders that I trade with. That Melancon is doing this. He's doing this his campaign virtually. So it's kind of like the like a little part of Star Wars / bringing Tupac back to life. They're putting him on stage in different venues, but he's broadcasting via hologram and speakers, and it's really cool. But the reason why I bring that up is because although an older candidate age-wise, he's really connecting with the younger movements and the anti-establishment, if you will, and kind of what's taking a hold here in the United States and in Great Britain. That's the big fears is you have a Le Pen and Melancon, who both really don't want to be in the Eurozone, that force is really moving towards this election. And so I'm gonna have pretty good early indications even before I go to the ballpark of where the euro's at, and some of these exit polls, and and what's happening and how the euro's performing. But I just want everybody to know it's going to be a really, really tight race. And so and really the best outcome would be a Macron Fillon runoff, and the euro would rip. I mean, it would rip higher. but if, you have Le Pen and Mélenchon, which would be the worst case scenario for the euro could literally, we could be, trading 200-300 pips lower by Monday morning. So Sunday evening, we could see a really big precipitous drop in the euro. I think if we have the Le Pen, Macron, runoff as expected, I wouldn't be surprised if the euro is slightly higher, but there's that element of surprise, and we've seen it. We've seen it in Brexit. We've seen it in with the Trump presidency, and I've always learned in my life, and I don't know about you, things happen in threes. They do, don't they? For some reason.
Look, that's one of my favorite formations, and that's why, it's kind of like a law of nature. It's a fib number. You're going to a baseball game, 3 strikes, you're out. So I believe that too. So right.
Sorry, can I interrupt and just mention something?
Yeah, sure, Stelios.
Sorry, guys. I just wanted to say, just for the people who are listening who are not, have not gone into great depths of, each candidate and everything. The reason why Blake correctly is saying that a runoff between Le Pen and Mélenchon would be the worst scenario for the euro is because Mélenchon, as we probably already all know, is is a left-wing party, and he actually, some of his views share a lot in common with Le Pen. Like his party look at the current situation of the world. They talk about failing global capitalism. They want
like
to
Sanders and Trump, and Trump, right, buddy? Yeah.
Yes, but Mélenchon actually wants to do things which are quite extreme, like taxing over 90% for incomes above 400,000 euros a year. Now, this is what he's proposing. Renegotiating EU treaties, quitting NATO, quitting the IMF, quite radical things. So that's why he would be a big danger to what's going to happen. A lot of uncertainty. That's why I think Blake and people are saying very rightly that this would be very dangerous for the euro.
Yeah,
I just wanted to point that out just in case people were not too familiar.
Yeah, and thank you for the clarity. And I never professed to be a political buff, let alone a French political buff by any stretch of the means. So always, getting comments from Europeans such as Stelios and Steve are so important, because this is, even though they may not be French, they're more in tune with, what is more than likely what's happening, even more so than myself. I pay just close attention to it just because I know what the market implications are going to be.
All right. Well, Blake, we're being corrected on our pronouncement, how we're pronouncing his name. In French, it's Sean, not
Mélenchon. Yeah.
Mélenchon. Mélenchon. Voulez-vous avec, je suis fromage.
Yeah, you know what, and I'll tell you what, the French, I've tried to speak many languages, and was my worst. So thank you.
Anyway, thank you, Murad, for correcting us.
Thank you very much. Yes,
at least us two ugly Americans, Blake and Dale Pinkert. So thank you very much.
And you know what, you're lucky I didn't say Le Pen and Melchin. Okay, so this is another really interesting site that I was just brought to my attention this morning. This is politicsmeanpolitics.com, and I'm not even familiar with the site, but it was just really interesting. Social media data analysis predicts extremists win. Now, this is from 2 days ago, and I was reading through it, and I was like, oh my gosh, this is really interesting. Excuse the street cleaner. I have the window open and a street cleaner just went by, if you guys heard that. I thought this was really interesting too, but there's so much stuff out there. I mean, we got to watch, but I think the point that I want to make is that you really just have to be very careful with positioning over this weekend. The euro dollar, I want to point out some technicals here. Everybody's should be very familiar with, here's the euro, and here's the triangle. Here's the dollar index. Here's the triangle. It's very symmetrical, and we're in the apex. So I'm going to venture to guess. Okay, and this is just the dollar index. We can talk about this alone. Or actually, let's go back to the euro really quick. Okay, so we'll just talk about the euro really fast. If there's something that happens this weekend, and there's a situation that is euro bearish, we're coming out of this triangle. There's no doubt in my mind. Now, if it's what most people believe is you know, Le Pen, Macron win, the euro may rally, but I don't know how much upside we have here. I mean, I'd like to see how the euro responds around 108, which will be right here, and really 108, 108.30. Those are going to be, you know, that's going to be a really key resistance going into this weekend if things happen the way that most people predict. You know,
I know we're not options traders, Blake, but you know what an option guy would do here? He'd put on what's called a volatility spread.
Sure.
Yeah, he'd buy put by a call, knowing that there's going to be a move one way or the other that's going to compensate for the one that doesn't work.
Yeah, absolutely. I mean, you could. There's definitely different option plays to take advantage of this, and I'm not an options guy, and because I'll mutilate a lot of the definitions. But one of the other things that I really want to talk about is I'm actually positioned short euro pound, excuse me, and now I have been short euro pound since the 84.50 level. My trades are mark to market, so I have to kind of keep in my that means every day I readjust my P&L readjust to where that we closed. So I have to keep in mind that my positioning was really more around this 84.50 level with all the positions that I've put on since. So the way I'm looking at it is, even if there's a euro positive type of news or an outcome where the euro gets a little bit of a relief rally, which is very likely, the fact of the matter is the pound's in breakout territory. So I don't really mind being short the euro pound. Will the euro pound go back up and retest the underside of this neckline? I think that's entirely possible. I'm totally mentally and account-wise prepared to come back and retest this this neckline here, like this 84.20, 84.30, 84.50. I'm prepared for that. That would be 100 pips higher in the euro pound, or about 90 approximately from where we're at. But again, this is expectations. I have expectations of that already. But what I'm looking at here technically is that we are breaking down. And if there is, God, now I don't even want to say his name.
Mélenchon.
Mélenchon.
Well, there you go.
There we go. And Le Pen runoff, then the euro pound, and I'm not exaggerating here, we could be trading at 82 pence, which, shoot, I didn't want to do that. I didn't mean to move that. I grabbed the wrong thing. Hold on, really quick. That would be a 161%, or you know what, let me delete that really quick and let's just redraw. 82 pence, okay, would be the 161% extension of the last right shoulder, which would take us right here. That's where it would take us, and I would not put it past being there or even lower. This is the 618. I'm sorry. Down here, which would be 81.6, somewhere between here and here. I would not be surprised if we see those levels, you know, on an unexpected Mélenchon and Le Pen win. Yeah, I think I said it correctly. I'm not expecting it though. I'm not sitting here going, okay, I'm loading the boat short because I'm expecting us to gap down to here this weekend. No, it's, you know,
Sorry to interrupt. Just something as well. Keep in mind that in such a scenario, S&B is also going to have a very tough night. Very tough.
Oh God, yeah. Oh, you know, and I'm glad you brought that up. Stan, who is a friend of mine, I trade with him. He was pointing out the Euro Swiss, which I don't know why it's not on there right now, but that's all right. The Euro Swiss was really under pressure. I mean, yeah, I mean the Euro Swiss in that type of situation, I mean, we could literally be trading below all this support here around 106. I mean, they're going to try to hold it, but you're right, Steve. I mean, how successful would they be?
And keep in mind that their line of defense is against the euro, which means that, yes, I expect them to be successful because now they have a lot of experience in holding the market. And I know that somebody would immediately think, what the hell are you talking about, dude? It's just recent that the floor was, broke, but that was intended by the S&P to let the floor break. Yes, the move we have there on the left. But they have a lot of experience in how to hold the market, so I expect them to be able to hold, at least initially, the euro market at a decent level, the euro CHF market at a decent level, but we're going to see a big move of the CHF against other currencies. Obviously, by keeping a bid on the euro CHF will will subdue the move against other currencies as well, but up to a level, which means that that's also CHF is also a currency to pay attention to that night if something like this happens.
If something like that happens, and that's a great point. I was going to bring that up anyway, so I'm glad you did. And you're right. It's going to be under a lot of duress. There's and we talked about gold. I think it's worth noting, and we have to note it again, that gold is up against a multi-year trend line. Here's the weekly chart. It is stubbornly strong. Anybody who's short right now has got to be sweating bullets. Has got to be sweating bullets right now. Anybody who's on a short side of this, you look at like the weekly relative strength, we're not anywhere close to being overbought. And then even if you go out to the dailies just are working off overbought signals, and we're still holding near the highs. So we popped to new highs here, and relative strength was confirming this whole move up. So if we break into new highs again, relative strength is going to pop through these highs, and we're going to be challenging some of these levels that we haven't seen since the move back in 2016. So we could literally spike up towards 1350 to 1400, and then we might start matching relative strength that we've seen in the past. It's not uncharted territory. So that's why if you're short gold, I mean, from a risk reward standpoint, it makes sense to be short gold. It does. Like if you took out the equation, anything fundamental that could be driving gold, if I was strictly just looking at charts, I would sit here and go, yeah, well, let's short it. It makes complete sense. But knowing the risks ahead right now, it doesn't make sense. And that's the thing that I think we all should be paying very close attention to, because this is going to be the major mover in an unexpected, very bearish event for the euro.
What makes most sense to me, Blake, is to be a spectator into this event rather than a speculator.
Yeah, and I aside from the euro pound, which I'm holding, and I have no problem holding the euro pound, I have reduced all of my other euro exposure. Even last night I was short the euro dollar, and I took maybe about a 10 pip loss on my cost average, and I closed it around 106 or 107.18 last night, and my cost average is like 107.05 or something. I had to guesstimate, but I shorted some more when we got to 107.40. Yesterday.
That was a good number yesterday, wasn't it? That 40.
Yeah. Well, it wasn't a great number. I actually missed the top. I missed the 618 here, and I shorted it back on the way down. So I didn't time it the best, and I knew I didn't. So I just bring up my cost average to exit, and that's what I did. And I took a small loss, which is no big deal. It's for me, it was just the peace of mind of not having that exposure going into this weekend. Again, the euro pound I don't mind so much. The euro, yeah, that's a little bit of worry. And so just one last thing, because I don't mind the pound, and the reason why I don't mind the euro pound is because I believe the pound dollar is attempting a breakout, and I believe it's building a formation. I believe that this move below support shook out traders, and it got people short the pound dollar, and we squeezed right back up again. Keep in mind, this is after a bearish and a very weak retail sales number.
Yeah.
Yeah, they came in and scooped up the pound immediately when it dropped. When it dropped below this support, I bought more pound Canadian, pound Aussie, and pound New Zealand. And the Canadian dollar, which it out is breaking out because of the weak Canadian data. Yes, take a look at the pound Canadian. This is a frickin' monster. Now, I actually sent out I sent out a chart this morning that we finally hit. The targets from this is the my initial target was already hit on the pound Canadian, but because this, excuse my voice, because we had a false breakdown over here, I'm actually expecting to challenge these areas anywhere between 175 to 180. So, there's still, in my opinion, there's another 700-800 pips in this of juice left in this bad boy. So I don't want to, even though it is overbought, I don't mind being on the long side of this one at all. And yes,
the rebound is a testament to what you were saying before and what you were saying yesterday, and that's why what we're trying to pass to people here. That's why we also use the DSI and we also use the COTs, because they show you positioning. Whenever you have a dip, people that have been trapped short are thinking, okay, perhaps this is my best opportunity to get rid of my position with a lower cost. And that's what happens. That's why, for example, we see bad prints getting bid, or the opposite in other occasions, like good prints getting sold, simply because the market is still not properly positioned. And that is why we're so convinced that the path of least resistance at the moment is higher for the pound. That's what I wanted to say to our friends.
Yeah, and that's correct. And this, I'm showing you the daily sentiment index that we pay for, raw data that we pay for to look at sentiment. The pound's been, the daily sentiment has been just so beat up in recent weeks. It was down at in the teens, and that really triggered me over the last couple of weeks to be buying cable, and that's why I've been long the pound. Not just that, obviously technicals have gotten me there too from a timing perspective, but that's why I've been extremely long the cable for the last couple of weeks, and I made my whole month on Tuesday, but we use different data sets to help come to these different conclusions. That's why I made this point yesterday. I'm going to make it again. If you're looking at the chart's going to tell you, give you the picture of what's happening. It's like a roadmap. But also, we use other things to come up with decisions when we make our trading decisions in the market. It's kind of like, okay, I have a map and I'm driving from here to here, but I also know, because of my past experience of taking that road or that route, that along that route on the way to our destination that we're following.
You know where all the bathrooms are.
I know where the restrooms are. I know where the pit stops are. I know where the gas stations are. I know where the McDonald's is. Yeah, but just to use a simple, but that's exactly that's why I don't look. Charts help me enter. They help me time my entry, and I'll be the first one to admit I'm not the best timing trader out there, but it's my roadmap. But everything else that I look at, I take into account, and that's why you have to use several things. And I'm not here to pitch ForexAnalytix, but that's why ForexAnalytix is, in my opinion,
you're not objective about that.
No, I'm not. Yes, I am. Okay. Anyway, but guys and gals, I want to wish you a very, very good weekend. It's going to be I expect today to be very choppy and not a lot happening today. Maybe some position squaring, but just be really careful about what you're holding over the weekend. Like I don't mind having pound exposure, but really, it'd freak me out if I had, much euro long exposure. I would, and you got to watch these precious metals. be very careful with them. And
Yeah.
and I think Steve brought up a great
especially
point.
with the DSI up around 80, 90. I noticed when Steve was showing it. So,
Yeah.
you know, it's not like there are a lot of bears according to the DSI anyway.
Yeah.
Wasn't there like an 89 reading on gold?
Yes, on gold there is. It's actually quite extreme. The commodities can get rather extreme. I've seen, you know, like cocoa be, we're at a 4 reading right now, and we've been in the teens for, you know, for the last couple months. It's so the commodities tend to get, you know, can stay in extremes a little bit longer than everything else, but FX tends to be more of a like a rubber band effect because it's currencies and they go up and down all the time. So that's why they tend to be a little bit more sensitive to the sentiment indexes, and that's different than other sentiment indicators you may be looking at as well. But hey,
surface, before you mention it, sorry for interrupting before you say bye-bye. We had also a notification from ForexAnalytix about the break of 135. You mentioned indirectly that we had weak data. We actually had weak Canadian CPI. We had a 1.6 reading while the market was expecting a 1.8, and the previous one was 2%. And we are actually having possibly, I'm saying possibly because unfortunately USD CAD has been very, very choppy lately, but we seem to be having a break higher in USD CAD. Yes. It's not only the little area you see, Blake. If you zoom out a little bit, I know that you haven't done yet your daily charts because it's not the end of the day, but go to the daily.
Okay, Ronnie.
Now, and drop a trend line through here.
Exactly.
Yeah. Actually, I knew that was there, and I didn't draw yet. And I actually mentioned it in the analysis, and I said it's not drawn. And I know it's there, but yes, you're right, Steve. We're trying to break here. I mean, it's pretty. And if crude oil keeps failing above 50, and we drop towards the mid 40s, I mean, that's just going to give further impetus to this dollar Canadian move, and then you throw risk aversion on top of it.
And this also enhances the view about the pound CAD that you saw before, because we are quite bullish because everything points to higher, and now we also have some indications that perhaps USD CAD is breaking higher. So bringing the conversation back to what was Dale saying before about relative weakness and strength, being long the pound CAD is at the moment looking quite well.
And take a look at like relative strength. This is actually, I'll take this opportunity really quick to talk about relative strength. You see how we have peaks over here, right? You see we're getting up in that neighborhood.
Yeah.
If you look at right here, that was a high, that was a higher high. Relative strength was still elevated, even though we stopped making higher highs, finally marked that high. So that what I'm telling you is, even though we're overbought, that doesn't mean price has to stop.
Oh no, it's a confirmed high. It's a confirmed high. I renamed the RSI from Relative Strength Index to Real Simple Implicator.
Because I thought you were going to say really stupid indicator.
Implicator is not a real word, but it explains it. So yeah, that's a sign of strength, not a reason to short it.
Yes. Yes, thank you very much, Dale. And Steve, I appreciate your comments. I'm going to turn it over to you because I actually have to run to the restroom because I don't have a porta potty.
I'm going to wrap it, Blake. I'm going to wrap it, Blake.
I know you guys don't need all that information, but hey, I know if you needed to wrap it, but and if you need to make any comments to people that are commenting to you or us, feel free to do. But you guys have a great weekend. Thank you so much, everybody.
Thank you very much.
Oh, hey, wait, one last thing. And guys, please get your pictures together for our giveaway. Please do. It's going to be fun. It's going to be awesome. I have the dice sitting in my desk right now. They're super cool. They're heavy. They're beautiful. And let's see if any of you guys can match what Nick sent out yesterday. Wait a second before I
showed it. I showed it.
Wait. but maybe I shouldn't ask for that. Make sure you guys get in a good picture, and remember, it has to be with you and your trade station.
There's a picture. There it is, Blake.
There it is. There it is. All right, guys, I gotta go. Too much.
Okay, I want to thank Blake and the whole
Thanks.
team and everyone for, bringing a great content and analysis. Ronit, are you still there? Because I want to do a test with Ronit.
I just posted, by the way, I just sent also the link for the blog post. At the bottom, they can find the mail address they can send the pictures to. It's actually giveaway at forexanalytix.com. They can find it there. It's a clickable link.
Thank you, Steve. So I want to do dress rehearsal. We're going to have our first face member present in an interview on Monday. So Ronit, go ahead and tell me if this works. So we ran into a problem at my previous room and want to make sure that I could hear him and see him for Monday. You are now the presenter. And let's see.
Okay, Dale.
Okay, Ronit, I have you. There's a little feedback. And there's your screen. So we're set for Monday. And let's see.
Yeah, sure. So
okay,
I'll make a quick.
Go ahead.
And, we can actually do something like gold and whatever you want, Euro, USD, and what's long-term and short-term, what is happening. And before I finish, actually just check it out that crude is actually very bullish. Although a lot of people think that it's bearish. There's a triangle out there. It's like a wedge from 2008 highs.
Let's save all this analysis for next week. I know you're anxious to talk, but
I don't know. On Monday morning, I mean, there'll be a lot of things which will be happening over there.
There'll be plenty. There'll be plenty to talk about. So Ronit's going to be our guest here on Monday. I've seen some very interesting views. Some might even say extreme views on some of his views, how things are going to play out. He's one of the super bulls in the dollar, although I do believe he's looking for an interruption and one more hurrah of dollar weakness before his scenario does.
This could be a trigger over here, something like 1.21, 1.23, rip-off kind of. That's why gold is actually, steaming through that 1290. So that's a very important point. Probably 1600 could be by June first week. So I'm precisely telling you about the time. So let's see how it works out. And that's the crude chart. If you can actually see the screen, it's actually a very good, nice triangle.
I took your screen away. I want you to save what you have to say till Monday. Can you do that?
Yeah,
all right,
I can do that.
Okay. So I want to thank everyone.
Thanks a lot.
Okay, Ronan. Thank you. So I want to thank everybody for all their contributions. And let's see, there was a question from Calvin. Calvin, you still here? You wanted to know where pound CAD could pull back to? Okay. Did you subscribe to FA? Not just a trial, are you a subscriber? Good, buddy. All right. All right. So I'm sure you'll be updated on that. I'm not following pound CAD right now. I'm just glad I'm not short CAD anymore. That was a trade that was wrong for 50 pips this week after being right for 200 the week before. So everyone have a great weekend. I think that we have the best room on the net. There's so much great analysis from the team and from the community, and even that guy Forex Stop Hunter provides some decent analysis once in a while. So have a great weekend, everybody. This is a great time to do your homework before the French elections so that you're prepared to react to whatever scenario does occur. And I want to remind everyone, if you had a great week, be generous, be grateful that you have equity to risk, and take care of your brothers and sisters you see standing around on the street corner with a cardboard sign, and plant good seeds, and you'll have a bountiful harvest. So with that being said, remember, don't just count your pips, count your blessings. I consider being part of ForexAnalytix and having a free room for everyone to participate in as a blessing in my life, and I hope you guys feel the same. Adios, my trading warrior brothers and sisters.